Well, good morning. Good morning, USA. I want to say straight from OGGN. Hello, panel. How are you guys?
Good, thank you.
Doing
And I
great.
would say, Mohammed, I know you're on the other side of the globe. So good evening to the other side of the world. How are you, Mohammed?
I'm doing very well, thank you. Yes, it's nice I'm here, but thanks for checking in.
Yeah. Well, thank you guys for agreeing to be here. This is a subject that, a lot of times what we're seeing time and time again here at OGGN, in the middle of all the media, being able to have a lot of interactions with CFOs, CEOs, founders of businesses. And not only that, but the service companies that work with the oil and gas industry, moving up in a downturn, there is almost it's almost like a tedious subject matter where people go to cuts and they talk about things that are very operational. And what I love about each and every one of you is that when we selected this panel, we had a vision of, we knew the viewers, the listeners, the people that follow us across the world, really, what they want to know is, what tactically can they do? What are the conversations that are happening when these executives that are winning are in the car talking to each other? What are the conversations that are happening that aren't just, all the fluffy stuff and all the doom and gloom that sometimes we hear in a lot of the Zoom calls that we're seeing online? And you guys are a beacon of light in yourselves, because a lot of what we're going to share today is going to be, on one hand, maybe quite a bit candid, a little bit of the truth could hurt a little bit, but you're going to give the light at the end of the tunnel, the moves these folks can make. But on the other hand, we are going to talk about the subjective part, the way we feel about it, the way that we keep our relationships strong, and more importantly, the fact that you can go through a downturn, and in this world, you can actually make choices, and they don't have to be difficult to grow your business. So with that, I am very excited to introduce each of you. Mark LaCour from the Oil and Gas Global Network, our editor-in-chief, is here with us. I have Mohammed Hagazi from TGT Oilfield Services, Dan Piette from Blueware, and Bill Arind from Data Gumbo. Ashraf from Eternal Energy. I want to start with you, Ashraf, because one of the things that you and I talked about very early, before we really knew who would be sitting here with us today, is we talked about the fact that it seems time and time again, there's a fatigue in people talking operation costs, things to cut, and we're not going to do that. We're going to be talking about something very different. Do you mind, at least just for a minute, talking about the contrast of a scarcity mindset versus the people that we're communicating to that are saying, what do I do now? What do I do tomorrow to be in the best position for 2021? And to, more than important than that, to be prepared for the new normal that's never going to go away.
Yeah, thank you, Warren. So welcome to all the viewers that we have today and maybe later. Actually, the biggest issue, I think, is when we go through a downturn, the most difficult part for all of us, which side of the fence you are, is people. People is the core of every business, and they are the most important thing of whatever business you have, right? And every one of us sitting in this panel here today and the audience, they are people who have been on one side of the coin. They are either executive leaders releasing teams member, or they've been employees suffering, or peers seeing people gone. So let me go few thoughts that I've learned through the years and I've exercised, and they work. And the first thing is, when we are in leadership and we have to let go of people, we learn to do few things. One, take the decision very fast. I mean, you don't take weeks and months thinking about who to let go. The decision need to be fair, be very clear with the company strategy, but take it with kind of urgency. And then when people need to go, they need to go with respect. And I use the word respect, not anything else, because we need to respect everybody who's going. They deserve respect. People who go deserve respect. And the people, when they go themselves, they have to keep the respect from themselves. It's a mindset, respect and humanity in the way we let people go and we try to help them. And once this is done, and we all suffer through this, if you do it as a leader, then the next step is sit back and see how's the motivation of yourself and your teams. Because it's very common, and there has been a lot of studies showing that after a release of large number of people, every corporate have a drop in productivity 20 to 30%. We have exercised that ourselves. So I remember in my first management job back in 99, the business leader that we were in after release, quite high percentage, like 20% of the workforce were let go. He gathered the 30 managers in the room and he stood up and he said, guys, in a crisis, people, it could be a natural disaster, it could be a war, it could be a business downturn, people have to go. We all feel the pain. But guess what? We took care of them. Now it's time to stand up and fight because we have no other option. Get your motivation up, team up, and pull yourself, pull your team member, and go out and fight. Take care of your family, your employees, yourselves. This is very important, by the way, and your clients. And it was very wise words. And by the way, I use that for the rest of my career. Now, I don't want to take the speak, the mic for a long time. There's a couple of other things, but they go more towards the growth part. So I'll keep for later. But I would say to everyone, take care of yourself, take care of your team, because make sure everybody is motivated. That's the first step in a downturn to go toward the growth, right?
That's terrific, Ashraf. Thank you so much. And it's a great way to just get that garbage out of the way, right? Because that's the thing, is where we're going for the next 50 minutes is somewhere extremely fun. It's extremely, it's a strategy-driven conversation. Before I get to my first question, though, I want to pivot to you, Mark LaCour. Out of all of us, you are shamelessly the person that is talking to the industry more than anyone. I want to, before I pivot to Mohammed and the subject of the health of a business, I want to ask you, old normal versus new normal. We're talking about a downturn. As someone who's been an outsider in the oil and gas industry for most of my life, I go, well, doesn't everyone know it's a pendulum and it turns and you just have to wait for it? You hear it all the time. I'm from Houston, Texas, but this is different. And so I'd like you to elaborate on that just for a few minutes. And that will set me up for this great exchange we're about to have.
Yeah. So forget the oil and gas industry. Just think of humanity. This year, 2020, has been insane. One thing after another, after another, after another. And you're right, Warren, in that the oil and gas industry, especially the upstream side of the house and the service companies that touch upstream, are used to the cycles of global commodity swings, right? High crude prices, low crude prices, high gas prices, low gas prices. But this is the first time in my history in the industry, and I think the first time in the industry's history, where not only we are facing low crude prices, low hydrocarbon prices, but much lower global demand because of the lockdown, because of COVID-19. And that's really what's hurting our industry. It's not the low commodity prices, it's the lack of demand. That demand has to come back. And very large companies, I mean, some of the largest oil and gas companies in the world are having to deal with this, and they don't always know what to do. But there's opportunity here as well. And I know a lot of people have lost jobs. I know a lot of businesses have shut down, but there is opportunity. And that's one of the things that we're going to talk through on this panel. Even in all this adversity, there's still places where you can still make a difference.
Wonderful. And with that, we are going to begin the exchange. So my first question is going to be directed towards Mohammed and Bill. And what I want to talk about is we had a strategy call where the topic came up in a time of COVID, which is not what we're getting into, but you notice people talking about immunity, health, being ready, taking care of themselves. Mohammed, you made a great parallel to this in you saying the oil and gas industry has to do the same thing. It's time for people to start doing their own checkup, but on their companies and how they're doing business. And so with that, Mohammed, I would love for you to share with me just your thoughts on that subject and the advice you give to the people listening going like, hey, I could have done a better job to be ready.
Yeah, absolutely. Thank you, Warren. So as I mentioned to you earlier, the main thing that people need to be looking at is what they can do for their business all the time, not just when a crisis hits. So as I mentioned, the health of an organization is very similar to the health of a human body. You have to build up your immunity, you have to stay healthy. And fortunately for us, the things that we need to do to stay healthy as a human being are mostly obvious and common sense. And really in business, it's not much different. So to be able to stay flexible and adaptable and lean is something you should be doing all the time, not just when a crisis hits. Today we've been hit by COVID. Mark mentioned before the drop in demand that we're seeing globally and so on. Who knows what's going to be next? Who knows when it's going to be? But really what to do about it doesn't change, fortunately. All you need to do is to be keeping your company healthy and with a large immunity at all points in time. You know, a lot of executives, and I'm one of them, praise their companies on their resilience in the last few months since we've been hit by COVID. And actually, I thought, you know, I kind of wanted a different synonym for resilience just to get some variety in what I'm saying to people. And I looked up resilience. And actually, there's a very interesting synonym for it, which I didn't even know was a word. It's called bounce back ability. Okay, so bounce back ability gives you an idea of what it actually means. It means that you should be able to bounce back from anything. It doesn't say from a particular movement or a particular shock. You should be able to bounce back from almost anything. And to do that, you need to stay healthy. And I think that's my view on the human body, human health, and business health as well.
Thank you. And Bill, you know, this really brings to my attention, you and Dan very much said, you can't always depend on cash flow. And that resonated with me. I want to give you a chance to share with everyone your point of view on this topic.
Yeah, no, I appreciate it. And the reason why I was so interested in this panel to begin with is just the human side of this topic. We're all getting beat down with the negativity and the health, and the beauty of what we're talking about here is that, you know, we're all in this together, right? We're in the arena, and the ability for us to help companies get through this in a downturn is really part of the magic of being in business to begin with. We're fighters. We've got to overcome. We got to find out how to compete. And we've been shaken to our core. All businesses are challenged. There's no sacred processes any longer. And I think arrogance gets in the way a lot of times for companies who think they're invincible. And the fact of the matter is this is the perfect storm where we've all been faced with some very difficult business decisions, whether it's the human side of this, which is really, really important. And the fact is that we're all doing things from our homes. We're inviting people, dogs barking, kids crying. I mean, this is the world we live in, and it's okay. And so I think when it comes to how do you survive today and how do you take advantage of these opportunities right now, it's being able to create cash with funding your operations by making tweaks to your processes. And I think as most businesses are faced with credit challenges when banks and credit lines get shut down, is that they have to find cash from within the business. And I think there has never been a better time for companies to challenge the status quo and be able to look at their business critically to make process improvements and find cash from within. And that's an important part of what you can do. And, you know, it's part of this world that we're living in today. So I think the obvious is that the industry needs to make those changes and find ways to do things better and challenge the status quo.
Wonderful. And as I listen to you, and I want to direct this to Dan and Mark. Dan, you are out there meeting with CFOs consistently. You've been in this industry a long time. I actually wouldn't mind it at all if you would elaborate a little bit on the fact that you've been doing this a while, right? And you've seen a lot of things, and you know what's different about today. But in your meetings, I want to add one thing, because I just want to push it towards one thing. I want to say, when it comes to readiness and the health that we're talking about, you know, if you could elaborate on what your conversations are, just even on that, but go ahead and take the floor. You've got several minutes. Yep.
Sure. I've been in the industry since 1980. I moved down to Houston at that point. So I like to tell people that I've seen the price of product drop at least 50% by 5 times. And I think if we add this next one and it's 6, and every one of these downturns is a little bit different. As Mark said, this is more of a demand-driven downturn, and the demand may never come back. I mean, there's a lot of other alternatives that are going out there. But every downturn I've seen, the people on the oil field services side have addressed it differently. Sometimes people just think it's not going to affect them, and they wait a long time. I think that Ashraf's point was a really good one. If you take a hard look at your business and you say, I'm not going to be able to support this number of people, make the cuts fast and make them deep. You don't want to cut a cat's tail off 1 inch at a time. You want to just go in there and cut it off. Taking care of the people is also very important. Now, if though, on the other hand, you believe you have a product, a technology, and this is going to Mohammed's point, if you have set yourself up where you're creating a lot of value on a forward-looking basis, and I think that's what Bill is doing as well, is saying, I've got a new technology, I'm going to save these companies money. You can go in and say, I'm not going to let anybody go. I'm going to dedicate it to this. And some companies I know have cut management salaries and not cut employee salaries. And I think that's really, really important. And when that's going on, in my mind, the most important thing is communication. Now, in a less adversarial, less disease-ridden environment, we'd probably do that face-to-face. Currently, we meet every week with all employees. So we have an all-hands employee meeting every Monday, and my management team meets every day. And I think it's critical to keep those lines of communication open because, again, going to what Mohammed said, you learn from the employees. Your employees come in and say, boy, why don't we try to do this with client number X, and we can solve their problem a little bit better. All of our ideas, they're not top down, they're really bottom up, and it's critical for all of us to understand that, which is also why it's critical to not let people go if you can afford it at all. And one more thing about the cash in the industry, I just got through an investor conference where I talked to 14 different private equity firms, the smallest of which had $200 million. Every one of these companies wants to put more money into oil and gas. The median size of this was $1.4 billion. There's a lot of money chasing deals. Now, what the price of that money is, as Bill knows, if you're in a small company, you know sometimes that money is extremely expensive, but you got to get through. You got to get through this, show where your value is being created, and then move on to the next step.
That's terrific. And so with that, guys, I want you to be prepared. I'm gonna have an exchange with Mark for a minute, and then I would love to get your point of view as kind of to summarize what we're about to get into. So, Mark, the oil and gas companies, even the service companies that always, I don't want to use the word arrogance, but they just thought this could never happen to them. It would never last this long. It could never be this much of a consequence to their bottom line. What do you say from an industry standpoint? What is your professional outlook on that? And then from there, I can't wait to have my panel share their points of view on the matter.
So first thing, thank you for pointing out that Bill and I have lots of experience in this industry. You picked the two old guys right to pick on. I'm telling you what's going on right now, and to Dan's point, it's we've been through several of these cycles, but right now there are companies that are doing the right things. They're going to come out of this and they're going to pull ahead, and there's companies that are refusing to do anything different, and they're going to disappear. Whether they want to believe that or not, this is a different environment that we're running into. Everything between the pandemic, the reduce in demand, the low hydrocarbon prices, geopolitics, the U.S. election, on and on and on. So if there are companies out there that are trying to just hold down until things get better, it's not going to work. I do want to give a quick shout out, though. We got a lot of people around the world. We got people from China, Russia, Pakistan, Brazil, India, Turkey, Guyana, Argentina, India again, Senegal, Aberdeen. So, thank you, world, for Barcelona, Nigeria. So thank you, world, for joining us. It's but Warren, to answer your question quite directly, we have to do things different as an industry. We have no choice. And there are companies that are doing it right now. This live stream is a perfect example. A few years ago, if you would have said that we were going to spread knowledge and education and help people with a live stream, I would have told you you're crazy. And now we're hip deep in the middle of it.
It's wonderful. So Ashraf, I'm gonna have you kick this subject matter off. The companies, the way they do business, the way they're prepared. Speaking of the healthiness of where they are situated, as we're very close to getting into innovation and technology and things of that nature. What is your point of view on the whole concept of some companies could have been ready but just weren't, and then what your advice is from a growth standpoint?
Yeah, Warren, I would not dwell much on if somebody's not ready, because if he's not ready, he's not ready, right? And as I said, I mean, if you're hit with something, with situation, with a crisis, I mean, you have to deal with it. You cannot just say I was not ready. And so for all companies, I think it's time to rethink and re-engineer stuff. And I think Dan touched on that a little bit, but what we have seen in the industry is, in a downturn, everybody, especially the bigger company, they go to the procurement department, the management, and say, let's cut costs. Let's cut, the price for procurement. Let's cut business. Let's eliminate, high-end services, et cetera, right? And of course, with it, they cut training, et cetera. This is the common wisdom. But if you look deeper at what's happening by some companies, and I don't want to name companies here just not to be specific, embarrass some and not embarrass some, but basically some companies have gone to the engineering routes, because in the oil industry, some of the platform, and I'm talking, let me be even more specific, some of the completion, the logging, the cementing techniques, the seismic techniques, etc., that we're using today is based on the fundamentals that started in the 70s and 80s. And we have never re-engineered the whole concept. I'm not talking about introducing a sensor or putting an AI over an existing platform. I'm talking about re-engineering complete platform, complete approach to business. The technology today allows us to re-engineer things completely different, right? And this is where it needs to go. Now, I think, and I believe in that, and I think the whole industry believes that, is the smaller innovators are much better suited to do that. Why? Because, simple reason, because they are not tied with big assets and big contracts and big platforms that they need to retain and work with, but they're starting fresh. So they are like Uber. They can reinvent the word and they can go and grow very fast. So I am strong believer in innovation and in engineering, re-engineering of the whole approach to concept, as well as not the new technology, but the deployment of new technology. I'll just get a very old message and close with that. We all lived the era when Apple came with iTunes, right? And it killed many of the outlets that sold music and CDs and video, the old tapes. Why was iTunes unique? The hard disk storage, technology was already there. The internet was already there. The music industry was already there. The video industry was, so everything was there. What was different is the business model and putting that together in a way that is unique and challenging the world. And that's what I really, look for and work with. We are working in Eternal Energy with companies who do that. That's our focus. Innovators and smaller and mid-sized companies who want to change the industry, not commoditize things.
Ashraf, so many companies are afraid to be innovative. That's the challenge. And the funny part about this is it's not even funny. I shouldn't even say funny, because COVID is not funny. It is a disruptor. And companies are unfortunately looking for the perfect time to be innovative, to be somebody who challenges the status quo. And I still see too many companies challenging that and being fearful of making those changes, those step changes. And to Mark's point, there are companies that are refusing to do things because it's not the right time to introduce something new. They're going to go away. And that's this unfortunate part about this mindset. And so if you're an individual contributor, you're a manager, you're a field personnel, whatever, and if there's a better way to do something, do it. Don't wait. You need to bubble that up in the famous suggestion box, right? There's people shouldn't be fearful of bringing new thoughts and new ideas to innovate, because if you don't, you may not be around to enjoy, your career in that particular role or whatever. There's lots of disruption going on right now, and still companies are afraid to make those changes.
I've seen this so many times that when the oil prices are high, the oil companies say, I don't have time to look at new technology. You know, I just got to pump oil as fast as I can. And when oil prices are low, they say, oh, I don't have money to do it. And so we're always whipsawed between these two pieces. But this time is different. I mean, you know, we say that a lot. But if people aren't going to fundamentally change, and I loved Ashraf's point about the iTunes, and I'd go to the iPhone and I'd say, you know, with things like cloud computing and artificial intelligence and deep learning and Internet of Things and blockchain, all these things are out there and we can take advantage of them. Now, most of my career has been in upstream, very, very focused. And upstream, I hate to say it, it might be a little bit fat because everybody says, you know, if oil prices go up $2 a barrel, all my problems go away. Well, you know what? They don't go away. They get hidden. And so we need to find a way to get these innovations implemented. We're starting to see it. And interestingly enough, we're starting to see it in some very, very big companies that I wouldn't, on the producer side, that I would not have anticipated coming in. I think the incumbents on the oil field services side are a little bit scared because they're saying, how am I going to adjust and do differently? Small companies like ours, like Data Gumbo, I mean, you know, we are coming in with a totally different solution that the big OFS people don't want to look at because they have a huge infrastructure and they're paying their executives tens of millions of dollars a year to do what, right? To do the same thing they've been doing for the last 10 years.
So hey guys, Mohammed, sorry to leave you out of that round, but there's more coming. But this is where we're about to approach the 30-minute mark. I want to take a 5-minute opportunity for me to just shout out some questions that I'm getting online. And let you guys just, when you feed the fish, you just like throw the food in and they all just start splashing the water. You have perfect permission to do so. I'm going to throw the question out. I have no idea which of you are going to feel intuitively like you're ready to reply to it. But the first one is, hi, Warren, what is the group's long-term sustainability projection for the oil and gas industry? More importantly, what would the yield point be for 10, 15, 20 years from now? So with that, I open it up to you guys for the next 60 seconds or so.
I don't think we'll ever hit 100 million barrels demand
on
again. Yeah. I don't think we'll ever hit 100 million barrels a day demand again. I think that we have hit peak demand now. But I'll also say with the amount of oil that's falling off the market, if you look at the shales, if you look at, the Middle East, it's easy to say we still have to look for oil and we will be consuming oil in 10, 20, 30 years. How much? I don't know. I think it's going to be hard to run an airplane on batteries unless energy density changes a lot on that.
I would say gas.
Yeah, I agree with that, and I think as well. If you look back at what happened during the peak time of COVID lockdowns and lack of travel and so on, I think the demand globally only dropped to about 75 or 78 million, and only for 10 weeks, and that was the absolute bottom of everybody locked at home. No flights taking off, more or less. So, there's actually not that much elasticity in how much it drops. And I agree with Dan. I think it's going to be moderately solid and incrementally growing over the next few years. But I don't know what 20 years, a bit of a long stretch.
20 years.
Yeah, I think gas is going definitely to grow and for some time to come, because despite the net zero target is being aggressively discussed and invested in by many people and companies, but I think there is reality. The reality of the world might not be as we all wish, to go to the net zero. And the second thing is, to talk about sustainability and so on is, I really like what I talked about this a couple of days ago on LinkedIn. I like what some countries are doing, like UAE, where they are investing heavily in their oil and gas assets, particularly the gas, but as well they're investing equally in renewable and alternative energy. So that's for me is the ultimate formula we all need to go to.
Terrific. And I want to send a shout out to Goran Gramatikov, who's the Chief Operating Officer at Apave Gulf, for sharing that question with us. Another question that came up, or more of a comment, but Arun Sahu, who's a project manager in the oil and gas industry, he wanted to know, like, what indicators, what are the indicators that people should be focusing on? Like, what are the indicators that you guys see, or possibly he wants to make the comment that companies should be looking at different indicators. Any comments on that topic?
KPIs are sort of the buzzword with what are the indicators. I mean, it all depends, I suppose. I don't know the context behind that question, but I think that the trigger point for doing anything in being proactive versus reactive is one of the challenges that is out there. Companies are cut thin right now, and when it comes down to activities, and Ashraf brought up IoT and how maintenance and things are being looked at differently today with key indicators. If you're talking about indicators in the form of operational markers and what to do and when, I think we're working in a world where the old model was touching everything and looking for the exceptions, and then the new model should be, you should be building your business on an exception-based model, so you don't have to touch everything.
All right. With that, I don't know, Mohammed, you want to say something real quick, and then I'm gonna kick off our next topic.
Yeah, very quickly. I mean, like I mentioned earlier, if you're looking at the health of your company, there are a couple of things that never fail the test of time, and one is to be looking at your cash flow, because that's it's a very easy indicator of how your business is really functioning and whether it's self-sustaining. It just never really goes away. I think it's a very, very important one. Of course, I need to have a disclaimer that every company is a little bit different in terms of its structure. And I think as well, one of the things that's going to be very, very important going forward is this concept of how future-proof your company is. And this goes back to your previous point, previous discussion, Warren, with how much people are spending on innovation and modernizing their company, because people only want to invest in something that's going to be around for a very long time. And if you come across as being, future-proof, then they'll invest. If you look like you're about to go extinct in 2 years, then you're not going to be able to get any investors interested.
Perfect. So thank you for that, guys. So here's the question. Let's talk about, do revenues, or it's been said, revenues can't be a condition of innovation, right? You know that there's this cash flow difference of what people are feeling today versus before the downturn. However, with everything we've seen in the landscape right now is the time for people who have the growth mindset to make adjustments. And so with that, I'm going to kick it off to you, Dan Piet, first. And then I really do want to hear from each of you on this matter. It's quite important.
Mm-hmm. Yeah, the growth aspect of this is just tremendous right now, and I think that you need to develop a relationship with your clients. First of all, as I said earlier, you got to respect your employees, engage with your employees to figure out where there's new stuff coming in. But just importantly is find those clients and the innovation centers within those clients. And it's not always where you think it is. It's not always in the R&D. It's not always on the technology people. Sometimes you'll find maybe a young technician, a young engineer, a young geophysicist in an oil company that says, I want to try this and I want to do it differently. And they can engage with you. And sometimes it's somebody who is, my age, an old geophysicist that says, I understand now that we can't do these things the same. And most importantly, on that side, you want to look for people that are looking for orders of magnitude of improvement. I mean, if you come in and you say, oh, I want to decrease my cycle time 10%, let's be frank, you can do that without too much trouble. But if they come in and they say, I want to decrease my cycle time by 90%, that forces you to look at it differently. And those are the views that will then cascade to a company like ours, any of the oil field service companies that can come in and say, okay, now I've got a big goal in front of me. How do we address that? What's the technology from, the IoT stuff, the new processes, the machine learning, the digital learning, all that. So for me, that's probably the most important thing, is engaging with really smart people that just take a different view.
Bill?
Well, I'm smiling because it still goes back to everybody says that there's not the perfect time to innovate, and it's a situation where if it's so easy, why don't people do it? And we talk about setting business objectives and these small opportunities. What I hear consistently in the marketplace, the biggest challenge is the feed or the actual bandwidth to go do these kinds of things, right? So the industry's been cut. There's not as many people. Projects get delayed to try to innovate because they don't know if the person next to them is going to be around next month, next week. So that inevitably creates delays. And so the urgency is not there to make those innovations happen. And each of these innovations, if you set a reasonable objective to experiment and try, and not be fearful of raising your hand that there's a better way, because if it doesn't work, that you're worried that that's going to be reflected poorly, that is a terrible cultural component to the world that we live. We have to be able to try things, to explore and experience whether or not that's going to bring a opportunity to do a field trial so that you can experiment and make mistakes so that you can make those course corrections. Because innovation, if it was so easy, everybody would be doing it. Not everybody's doing it because they're fearful, because they don't have the people or they don't have the resources to do it. So let's try to incrementally make some changes and then double down where those successes are.
Terrific, Mohammed.
Yeah, and I absolutely agree with everything that was said. And the decision to innovate or modernize is like the decision of becoming healthy or wanting to invest. When's the best time to do it? It was yesterday, but if that's not possible, then start doing it today. One of the bad and good things about our industry is that when it comes to modernization, innovation, and digitalization, we are depressingly behind many other industries. However, that's an opportunity. It means that most of the companies that are in oil and gas, whether they're services or operators or manufacturers, the potential for them to improve is extremely high. When you look at what's happening with industries that are more business consumers, B2C, than our business, which is more B2B, the rate of change and how they do things over the last 10 years is just mind-boggling, and we are still looking at, like somebody mentioned before, 5% efficiency gain, 10% efficiency gain. That's not going to cut it.
Yes.
Yeah, and with that, Warren, I mean, let me take the mic. I want, before you give it to me.
Yes.
So, look, let me just share a few recap on what all of you said. So let me say first, you use the word mindset growth. I want to link those. Before we talk about technology, in every company, especially in a downturn, we give the flag in many places to the guys who have to do the cuts. They might be finance, they might be HR, they might be managers who are good at that. But they're always around team members who are growth-minded, positives. They can see outside the box. They can look for the tenfold, the 10x things Dan mentioned. Those guys are around. So those guys need to be given the opportunity to speak and to lead and have a little budget to work with, and those guys will achieve that. In my last, in one of the companies I worked with recently, we did that during a downturn, and we grow a country by 35% year on year for multiple years. We managed to get revenue by just doing that. So growth, mindset, plus the people who can do it in a downturn. This is just the addition. Now, the second thing I want to share with everyone, because I think the industry went through something very interesting through the last decade, which was the shale, the unconventional in North America. One unique thing about the unconventional was the cycle time to deploy new technology were kind of almost 2 months or 3 months, because you always tried new well designs, new ways to do things. That was actually, talking to people up to 2 years back before the problems we were in, CEOs can force their team to deploy new technology at very fast rate. Why? Because they can try new things very fast. That's the nature of those assets. This is quite different for the big assets, let's say, we have in the Middle East, where the field development plan for a gigantic field takes years to be designed, sanctioned, etc. So deploying new technology in it becomes a little bit more tricky and needs more regulation. So they are different kind of the coin. But what I want to say here is we need to realize that sometimes deploying technology requires the smaller assets, the smaller companies, not the bigger company, just because of the size of assets they deal with and the complexity. Now, the last I want to say is catch up on the point of the centers to deploy technology. And Dan called that very nicely. The R&D groups in companies, they deploy new technology, but then there are assets or specific operation teams who can benefit from there. So if we can work with those guys who have the authority to deploy technology, but more important, who can turn it into scalable, repeatable application that shows return and value, so they can show the 10x. The problem we have in the industry, we go to a lot of proof of concept of technology with R&D, and then guess what? It sits on the shelf because procurement and operation did not take it on board. So if the industry, especially the bigger companies, can find a way going forward to have this more, I think that could be breakthrough. And by the way, that's a big barrier with most of the big companies worldwide, regardless of their core, because of the way they are structured, actually. I don't know what you guys think, but I think this is, in our industry, it's one of the reasons we are behind.
You have to find people that are willing to take those risks. And I think every one of the big companies have them. And it's fun. It's really fun when you get them because, we're all technology or looking at different processes. And when you finally see these people that say, well, I'm not really officially supposed to do this, but let's try X. Let's try this. And I have a little bit of money and I can spend this money. Because the other thing is, it's important for the big companies to keep small companies like all of us healthy. Because as I think Ashraf pointed out in the very beginning, or maybe it was Mohammed, the innovation is coming from us. It's not coming from the big oil field service companies. They've, about, 20 years ago, the oil companies pushed their R&D to the oil field service companies, the big ones. And now the big oil field service companies are pushing their R&D to us.
Yeah.
So we need to make sure that we take that and figure out a way to apply it.
Okay, and before we get to the second, there's the second subject. We're about almost 45 minutes in. I've got a few. If you guys are willing to hang around after our full hour, I would love you to, so we could talk a little bit about some of the comments and things that I'm receiving. But I want to send a shout out to Stratus Technologies for being the sponsor of today. If you haven't learned about Stratus Technologies or you don't know what they do, check them out. They are a supporter of OGGN. They're helping us bring this message to you. Ashraf and Mohammed, we're so kind to be able to strategize the topic. And when Dan and Bill and I got together, the content that you're receiving today right now is not just made possible by Stratus, but it's obviously important enough that these gentlemen have joined us today. So again, thank you to all of you. But here's the last question of this first component, which is, I just want to talk about acquisitions, adjustments, kind of the stuff that, now that we're towards the back end of the growth initiative. What is there anything that comes to mind from an acquisition standpoint? Is there things that you're seeing when we talk about people exiting certain geographies or making different adjustments to what they're doing kind of on their bandwidth? Is there any commentary you have on that matter before we get into the final segment?
Well, M&A, I think what's interesting, what we're seeing in the field, they're seeing some, Dan mentioned some of the private equity money. There's some really interesting plays going on with early stage companies that are getting new money, and they're beginning in the E&P in the E&P space particularly, where they don't have the baggage attached with bad processes and habits, right? And so what's happening with M&A that I'm seeing from the field is the new money's coming in, putting money into play, and to have a new company created without the baggage to go out hustle some of the laggards and the slow movers. And that's what's going to be fascinating about what happens when we look at, in a downturn, who has leapfrogged whom from the outmaneuvering in this downturn. And M&A is a vehicle to make that happen. And the new money that comes in makes that possible with companies that are formed without a lot of heavy back office and dead weight and processes that cripple you.
Yeah, and I want to add something which is not really on the M&A. It's more on the partnership part. I think the reality of the changes we have seen over the last 12 months bring two facts. Now, number one is there is a long-lasting change of the level of activities expected from different geographies. So the portfolio of companies need to consider geographies and where is their focus. Because it is a must, right? Like if you read, or you follow the market, many companies pulled all their investment into US. We see now the reverse from some of the service companies. They are getting out of US, but what about the oil companies as well? Some of them are doing that. So actually shifting the portfolio geographically is one thing, but you have to do the same with your partners. A lot of companies use agents, JVs, and so on. I would really recommend that people go and do health check. Some companies do that religiously every year, every 2 years, 3 years as part of their process. Some don't. And you better go and check, because maybe some of your partners have died in the COVID, right? Literally died as companies, and you're still considering them. And we have seen some of them. Companies change with time. And I think it's part of being pragmatic with the word, right? Health check of your partners.
Yeah. Mohammed,
I think
Dan?
if you allow me to add a couple of quick comments, I'll just add a quick couple of comments if you can hear me fine. With regards to M&A and just general investment, so of course we all know that interest in investing in the oil and gas sector has dropped in the last few years. It's not just because of any perceived reputation of the sector environmentally, but actually the sector hasn't been yielding as much profits and returns as many other sectors. And anybody who checks in on the stock market every now and then is so obvious, very, very clear. However, when the investors do consider any kind of M&A or investment into our sector, they're predominantly now looking for cash flow, because it's an indicator. It's a very, very important indicator. If you can't sustain your own business, especially if you've been around for a few years, that's kind of a problem. It's almost like having a mortgage when you're 70. You shouldn't really be in that situation. You should have paid off your mortgage by now. And the second thing is that they want to see that the industry or the technology that you're offering or the service that you're offering is kind of future-proof. And a lot of definitions now with regards to M&A acquisition in our industry, future-proof means that you can expand to any geography with very minimal effort. And this is where digitalization comes into play. And more interestingly, a lot of investors are asking, can you use your technology and services outside the oil and gas sector? Can you appeal to manufacturing, industrial, transport, just energy in general? So this is a very important thing. And one point, and I'll close with this one. A lot of the gentlemen here on the panel today said that the smaller companies will innovate quicker than the bigger companies, and indeed many of the bigger clients. The result will be that these smaller innovative companies won't find paying clients in their sector, and they're going to start looking outside their sector, and they're going to succeed. If they innovate well enough, they're going to succeed. So I think that's what the M&A is kind of looking for these days. Thanks.
Yeah, I'll quickly follow up on that too, and I agree with Mohammed. We're seeing a lot of interest from outside the industry in technology here, and I think you look at M&A at one or two sides, right? Our client base is getting smaller because oil companies are buying each other, and that's not necessarily good, because every time you see an acquisition, you see. I don't even worry so much about the layoffs. I worry much more about the lag of any decisions being made. When you get two big companies that get together, all of a sudden everything freezes and we say, oh, we can't make any decisions until we figure out what's going on. And then you see, I saw a statistic yesterday that in the last 10 years, the US shale industry has destroyed $342 billion in free cash flow. Well, you merge two companies sort of losing $2 billion each, and oh, isn't this great? Now we're only losing $3.5 billion, but that's not gonna help you. But the M&A on our side, on the small tech side, is really active right now. There's a lot of money chasing deals. There are a lot of companies that are looking to say, how can I build my platform. You'll find a big PE company like a Vista or something coming in and saying, "Oh, I'm going to use Data Gumbo as my platform and build everything on top of that," which creates some competition for these smaller companies. And it's fun to see. Some people get rich, some people work hard, and it does change the way we're looking at data and change the way we're looking at technology.
Terrific. And so, guys, we're about to shift gears now. All right. So that was really great. That exchange is quite meaningful for a lot of people. Just from the comments that I'm receiving, there's feedback that we're getting that basically is saying, having this open dialogue almost it reduces pressure in a way, because of the fact that people aren't alone, right? These companies aren't alone. It's across the board, and there's some that are making adjustments, that are connecting with strategic partners like you guys and navigating the downturn. And then there's others that are, maybe not as open to change. So now I want to shift the conversation to, what are you guys going to do in 2021 with your companies? What is your vision for yourselves when you walk into January of 2021 to make it a great year? What do you see for your company, for your adjustments, and so on? And I'll start with you, Bill.
We've got monster plans for 2021, and it's so much fun to be a part of, because what is happening is the stars and the moon are aligning here with the ability for companies to get started with some ideas to do things differently. And when you look at that, we are, as a company, we're positioned to do some amazing things with our customers that we have today, but our ability to grab new customers is going to be helped by building a huge ecosystem of ambassadors and partners. So I think the beauty of working together and being in an industry, we cannot do this alone. And the beauty of panels like this is we learn, we engage, we are part of this, and we're all in this together, and we all play a specific role. And what we believe is that with our story and what we're doing, we want to engage as many companies and folks who can help us serve the marketplace to help companies get through this downturn and turn it into a positive. So I think our view for 2021 is very, very bold and aggressive, but it's all driven by serving a market where innovation can be achieved through smart, quick wins. So time to value is so important for organizations now. They don't have time to wait, and they need to find some wins quickly in their organization. And so to enable that, I think our journey is going to be driven by building an ecosystem that's broad and global.
Great.
I follow up that 100%. We're seeing the same thing. We're hoping that in early 2021, most of the big layoffs, the restructurings have already happened in the oil companies, which means they're ready to start changing. If I had one wish for 2021, is I could start traveling again to go and see the clients and our employees on the other side of the world. I think it's tremendously important to have FaceTime. I know these things work. There's no doubt we're never going to go back. I'm never going to go back to traveling, 2 weeks out of 4 or 3 weeks out of 4. I don't think that's ever going to happen. But traveling once a month to see clients and employees, that's important. And more than anything else, as the vaccine gets distributed, as the pandemic kind of ebbs a little bit, I hope that's what we see. But with the changes in our client base settling down, we really think that's where, just like Bill said, that the changes are ripe. I really think we're ready to see an uptake on technology now.
Mohammed.
Yeah, well, thanks for that, guys. So, I mean, in 2021, I think I generally share the optimism that Bill and Dan mentioned earlier about the business. But for me, the most important thing is not what's going to happen with customers, what's going to happen with the industry, the oil price, and so on. Because let's face it, we don't really know. We kind of anticipate and we wish and we forecast. But what we do know is about our own business and about our own companies. And it kind of brings me back to the very, very first point that Ashraf started with, which is about the people. And I think going into 21, I would like to make sure that the people in my company have the same confidence that I have in them and in our company to be able to bounce back from anything. Because when you've taken a few punches and kicks, but you stand up again and you dust yourself off and you seem like you're in pretty good shape, actually, it gives you confidence for the next fight. So what's going to happen industry-wide in 21? I think it's going to be better, but we don't know. But to a large point, we don't want to dwell on that because we have confidence in our own health and our own bounce back ability. I'm never going to be able to say that word too quickly. In the face of anything that confronts us next year. Hopefully it's all positive and we take advantage of it.
Ashraf? Muted. You're muted.
Sorry. I'll borrow what Mohammed said. People, we have built a great, team over 2020, and that team is actually set up because actually we are having a unique model where we help companies going across geographies, as well bridge the gaps of the smaller companies, the startups who doesn't have a complete team. So we do that as well. And those things, the situation in 2020 made many companies understand the value of that. So we are having some great customers now, and we're doing great success with many of them. And actually, we're having more demands now in Q4 than we had maybe in Q4 last year. So I'm very optimistic by on next year with the progress we're making with the customers we work with the structure we have. But even on an individual, personal level, as an innovator and entrepreneur, I'm very optimistic because we have learned how we make bigger change now in the life of people with smaller company. I think people are realizing that more and more. And this last year, was a good lesson to many of us because many of the small companies actually did much better if they have the right leadership, the right team with the mindset, and of course the right application of technology. Not technology, it's the application of the technology.
Okay, so final question before I just invite you guys to hang out after the show for a little bit for us to chat. My final question is at a time where you see a lot of people's budgets are bootstrapped, you guys are very much technology based, you're in consulting, this game. But for the salespeople watching, the business owners saying, how do I stay alive? How do I do deals right now when everyone is like holding on to their wallet so tight, right? What advice could each of you share, like in your philosophy, on how to grow and add new partners, new clients in this environment? And I'll start with you, Mohammed, because I know it's late over there.
No, it's completely fine. I think this is a pretty broad question. It's very difficult to give a very kind of pinpoint answer to it. But what I will say, and that's in line with what we've been discussing throughout this call, if you're going to be thinking business as usual and try and do the same thing over and over, but just try harder, I don't think that's going to work. I think you really have to be doing something different, and you have to be able to innovate in how you deliver whatever you're delivering to your business. In the last 20 years, the shift to the user experience and the ease of being able to deal with the product that you are offering and how well it reaches people, I think that's the major change. So people really need to be quite brave and rethink how they're doing even the simplest of their sales process. Otherwise, their problem is not going to be just in 2019 and 2020. It's going to continue after that.
Just a few minutes left, but Dan, I know that you have a lot to say on this matter, but do your best.
The easiest thing to say the fastest is you have to be flexible with your clients and fit inside their goals. You have to be able to come in. We had one client say, I can only spend money that I save. So you work out a deal where you figure out where they're saving money and you share that risk. I'm a big proponent of sharing risk, but it's hard. Mohammed made a good point. You have to look at the whole sales process differently.
Vitamins or painkillers. So being able to be preventative versus an acute problem. If you can solve a problem and quantify the impact of the business and share in the risk, that's your recipe.
Yep.
Last, look at the change caused by the last year. There is major shifts within companies in the way things done because of the way they changed their organization, lost people. it's huge opportunities if it's understood right. So not only listen to your client, but really try to deep dive and understand them.
Terrific. Well, guys, I want to thank you. I want everyone who's watching this show to know that Stratus Technologies really is the player that helped us make this happen. This esteemed panel, I'm going to make sure all of them are in the links below. They're going to be in the comments. I would love you to connect with them, ask them questions. And while, you know, one of my commitments to OGGN is to try to keep my interviews within an hour, it's very difficult. And I want to, there's so much engagement from our audience, and I know that after this show, like we all have a few little thoughts. So I want to ask you guys, the panel, to stick around if you don't mind, 5 to 10 more minutes of chat if you're open to it. But for all of you watching, thank you so much, and hang around if you can. And that's a wrap for the show. And now we're just going to do a little 10-minute debriefing and share a little bit of take some comments, take some questions, and really speak about them in real time. So guys, what did you think? I mean, I think we covered a lot of what we planned, even though I know there's 10x more we could talk about.
So
It's all good.
We're off the air?
Yeah, we're on the air. We're on the air.
Ah, okay.
We're on the. I can close it out, and if you have to go somewhere, Ashraf, you can. I mean, you can drop off anytime. But I have a couple of questions that came in from our guests that I'm going to get into in just a moment.
Actually, I think that would be good, Warren, if we can try and get some more questions fielded. I mean, we might not be able to answer them all, but at least just to get a feel for what people are curious about.
So Haq Minhas, who's a director of reservoir technologies at Eternal Energy, said, "How many of you guys believe we've seen the oil peak?" I know how Dan feels about it, but what do you guys think? Mohammed, or you can? I mean, just anyone who wants to peak.
Yeah, you mean the peak in demand?
Yes.
Is that the question? Yeah,
Yes.
I don't think we've seen it yet. I think it's going to be coming soon, potentially in the next 2-3 years, because I think if the vaccines work and they're deployed globally effectively in 2021, there's going to be a lot of pent up demand. So there might be a bit of peak oil demand. Maybe world trade improves a little bit better over the next couple of years, more manufacturing, more demand for oil and energy. Still, a lot of people rely on oil and gas for energy as a primary source. So I think we're still going to be seeing a peak in the next 2 to 5 years, I imagine. That's my view.
I would say I agree with Mohammed, but I'll just add, even if we see that peak, it's not going to be very far from where the previous peak we have seen. It's going to be a couple of points, but it's not going to be by 50% more or whatever. It's just going to be just a nice hump, and then we go down from there. Yeah.
Yeah.
And then I had another question that it comes into the success mindset, right? So what are the traits that you notice with the people that you see making these adjustments? I know flexibility has been talked about, but if you were to, if someone's watching and they're going like, what do I do to adjust myself to be able to walk down the road of innovating in this difficult time, to being prepared for what's to come, and to almost be like what Bill said, like, here it is, I wouldn't describe Bill as anything less than completely optimistic with lots of conviction. He's saying we're going to have a great 2021, and this is why we're having it. So from a mindset standpoint for the leadership out there watching, any advice for them?
I think it's important. You could characterize it by saying you want to look at everything by saying yes and rather than no but. If you see a new idea and you say yes and we can do this with it instead of no, but we tried that before. It's really important personally, from a personal standpoint, to try to look at what you can do rather than just saying that's not going to work.
That's my biggest concern I have for the new year is, we've got so many companies that are wired to say no first and then look at something, or yes, but, and it is not the mindset we need right now. We
No.
need to be looking at things critically, and nothing is safe in the forms of processes. And one of the things that I, specifically with what we do, which I just didn't really appreciate until I've gotten into the belly here of what we're doing at Data Gumbo, is how much trust is missed. I mean, there's just not trust. I mean, it's whether it's employees that don't trust the leadership because they're going to be doing something that will affect them. So as a result, people sort of hole up and they don't want to be provocative in their thoughts. They want to just sort of go with the flow, and they want to be not noticed, and they don't want to challenge things. And as a leader, I can tell you right now, the worst thing you can have in a team is people who tell you what you want to hear. And if you're being told what you want to hear, you don't know what's really wrong. And if you don't know what's wrong, how do you fix it? And that can be a simple little thing, and it can be a massive thing. But nonetheless, authenticity is critically important, and that's culture. And so many people have been beaten down with by saying, nope, we're not going to do that. We don't have the bandwidth, or we don't need to do that now.
So let me add, Warren, here just very quickly. If some people are positive by nature and they can see the yes, they have the yes mindset, and the others are negative by nature. So what I recommend for people is to write a list of the reasons for a no, or for the reasons to reject, the negative side of thinking. Write it down and just park it, and then start to think what to do on the positive side, right? But once they finish with that, they have to start to write a list of what is completely breakthrough, what is out of the 10% or 15% that Dan was talking about. Once they have this list, the list of the breakthrough, now invest time and effort in it individually. And you can do that as a person, as an organization, as with the team members. This is how breakthrough and growth happen. If you invest all your time and effort in the people who say no, or the people who do the 10% increase, you never get a breakthrough. I can promise you that, right? None of the people who break Olympic records thought they can just, be the third or the second. They thought they can make a breakthrough, and that's how they made breakthrough. This is my question.
Okay, that's terrific, Ashraf. So last thing, and we're just a few minutes, we will cut it off. But Gerhard V out of Alaska says, how is innovation and new technology a saver in the downturn? So I know all of you guys kind of have your finger on the pulse, but if you could just give us some examples of things that you're seeing, things that you're suggesting, the conversations you're having. And I'll start with Data Gumbo, just because I know you're very much into this, Bill.
Yeah, no, I think, technology for technology's sake is never going to be the answer. Right. So it starts by having a business problem that you're trying to solve. And if you have a problem and you're looking to solve that problem, technology can play a significant role in that. So I think number one would be avoid the trap of investing in technology for technology's sake. It has to solve a fundamental problem. And you go back to vitamins and painkillers. There's an acute problem that companies have with cash conversion and being able to have checkers upon checkers and being able to effectively streamline processes. There's too much technology in a lot of cases, where there's so much investment in technology that there's all these layers upon layers of things that are there. What I would say technology, in a sort of a rationalization exercise, is if you really looked at a process in your organization and you looked at understanding the technology underpinnings, I think it's alarming to see all the layers that are existing inside of these organizations, because there's lots of repetition and things that are not intended to be duplicated, but they are. And so I think that technology element of this, I think, Ashraf, you mentioned the health check. This is the time to do a health check on your infrastructure and figure out how you can be leaner and cleaner with your infrastructure. And technology is an element of that, but it can't be for technology's sake.
I'm going to jump in there too, because of course our background is technology. I won't speak specifically about us because that would be kind of cheating, but we do have some fantastic stuff. But yesterday I read that for Google Translate, they have an AI, so they have a deep learning that it just goes off and it does what it does. Google Translate came up with its own language into which it translates everything, and then it translates from this language to the end user. So if you're going from English to Google Speak and then Google Speak to French or whatever it is. And those are the types of things that our industry has to be willing to take a look at. How do you optimize pump jacks? There's a little company called Ambient that I think a lot of you guys know, that they've come up with a brilliant way to optimize pump jacks. And this is something that I wouldn't have thought would have been even a question. I mean, hell, there have been pump jacks around for 100 years. And to think that you can apply new technology. So there's blockchain technology, there's deep learning, there's optimization of different routines. And we just have to look at all these technologies and don't think that technology is the savior, because it never is, as Bill just said, but don't ignore it either. Don't think that just because you've done everything with the first software company I ever worked for did economic analysis of oil and gas wells on a computer. And that was a breakthrough instead of using paper and a calculator, So see where we're taking the appropriate technology.
All right. Well, I know we're out of time. I want to thank you guys. Any closing words, feel free to share them now. And I'm looking forward for us to do more together. You guys have each really been so gracious to share this information from the Oil and Gas Global Network. Thank you to this panel. Thank you to Stratus Technologies. And thank you to Russ Johns with the Pirate Syndicate that allows us to have the skeleton to do this and actually make this run live on several different platforms at the same time. And with that, guys, last comments?
Goodbye.
We're out.
Thank you.
Thank you very much.
Thank
That
you.
was great.
Awesome.
Thanks a lot.
Thank you.
Bye.